Good morning to all of you. Thanks to VCCircle for giving us this chance. I'm Parag from Inventus Capital. This is what I'll do. I'll start off with some opening comments, then request the three entrepreneurs who have such diverse backgrounds to kind of talk about scaling for 5 minutes. After which I might have some appointed questions for each of them, and then we'll open it up to Q&A. So that is kind of the structure of the panel, so to speak. So whenever I think of scaling, I tend to think of three entrepreneurs of ours at Inventus Capital. They will kind of go unnamed, but I am privileged to sit on the board of each of them, and they have scaled beautifully from when they started 3, 4, 5 years back. I think the characteristics of those three entrepreneurs are so very different. Let me describe them for you. So one of them is a fast decision maker. He makes decisions like this. On the other hand, there is another guy who takes forever to take decisions, almost is pushed to a wall till he takes a decision. He'll take a decision at the proverbial last moment. And there's this guy in between who is very thoughtful, articulate, who will ask Parag 2 days to get to a decision, and he'll get to a decision after a lot of thought. All three of them, with such individualistic styles, different individualistic styles, have scaled their companies so beautifully. All three of them are doing very well, actually. But they have managed to do it. So essentially the point that I'm trying to make is in this business of scaling, or in this business of growing your company, there are certain elements which are very situation specific. It depends on the personality of the entrepreneur, the CEO, the team, etc., etc. It also depends on the domain you are operating in. But there are certain learnings which are which go across companies. And that is the objective of this session today, I think. We have three entrepreneurs, such diverse backgrounds. They operate in such diverse fields, different age groups, different cities, at least the cities they grew up in, etc. Two of them work out of Bombay, but it's such a diverse panel. So I am hoping to learn as a student of business. That's how I describe myself. As a student of business, I am hoping to learn out of the experience of these three entrepreneurs, how they have scaled their own companies, and substantially, so to speak, and how they have gone about it. So we will start in this order. Vivek will go first with his 5 minutes.
We are a niche technology company in the mobile identity space and do a lot of work in the mobile governance space as well. What we also do is we run, along with the Government of India, it's a PPP project. It's an incubator called Startup Village, which soon, if not already, would become the world's largest telecom incubator. It's only been about a year since we started. We've already got over 900 applicants. Okay, we've got people from the government side, people from the private sector, private companies, all joining this. So I'll come back to MobME, which is the company we started. So we started about 6 years back while in college. Okay, and college times were kind of interesting because it was the same time that in US and in the Silicon Valley, you had a lot of 20-year-olds, 22-year-olds dropping out, starting companies like Facebook and Yahoo and YouTube and whatnot. And in India at the same time, what is happening is there's a sudden outburst of mobile in India. So I remember, for example, the first year when I walked into college, okay, out of the 120 students, there was just one guy with a telephone. This is in 2003, okay, only one guy with a mobile. By 2005, there was only one guy without a mobile, okay. There was a sudden surge, as in all of you who would have been at that time would have actually noticed. It suddenly became an in-statement for people. People started buying. It became a way of life. To cut a long story short, we decided to take the jump into entrepreneurship. Literally walked out of college, started in the mobile space. Now we are about a team of about 150 people, doing about $4 to $5 million of revenue. So this is a long story short. So talking specifically about scaling up, so one thing we've continuously believed is we've only decided, so the only things that we enter is normally very scalable businesses. And the only way to build a scalable and sustainable company is if you can continuously innovate. Okay, so this innovation can be anything. It can be innovation in technology. It can be innovation in a business model. It could be identifying a particular market need. It could even be like copying a product simply because you are able to identify earlier than others that this is possibly a good product. Okay, so it's kind of a mix of all this. The important thing is to improvise, is to be agile, and grow the company as it goes along, and take it from there. Yeah.
Thank you. Good morning, and delighted to be here. It's always such a wonderful sort of energy that you get, and my congratulations to the team at VCCircle. I don't know if it's just me or some of you as well perhaps noticed this, but in this forum as opposed to the one previous time, I just find more suits in the audience. Is it a case of our startups maturing, getting more prepared for whatever, but just an observation on the side. I run a digital media company called Hungama. We've actually still term ourselves a startup, although we've been around for 14 years. We have about, we've actually incubated about 9-10 different businesses, which range from a digital agency business, which we actually did a strategic partnership with WPP last year, a fully enabled gaming business, which we are sustaining and continuing to grow. Our journey has really been broken up into 3 parts, and it's in the third element that we saw scale for ourselves. The first was when we started off on All Fools Day in '99. It was, without any business plan. It was just a bunch of entrepreneurs who had been around, and, you felt that, okay, internet mein kuch karna hai. You just want to do something on the internet. With that core premise, we started Hungama. And at that point in time, it was a conduit between consumers at one end and brands on the other end. And we were doing some interactive activations, promotions, e-promotions, advert games, etc. That was a time when the internet market in India was just about 1 million people. So it took me not too long, just about 2 months, to realize that anything that one tries to do here, it has to have an online and offline model because the market is not yet matured. This was also the time, one of the most heady periods of the internet era. If you remember, back in January of 2000 is the Time Warner AOL merger which happened, which in a way set the benchmark. And since then, the next 4 or 5 years that followed was really downhill. So we went through this particular phase. Our next little phase was from being a startup, we were able to raise some amount of capital from a VC firm. It was a small amount of capital, and they supported us sometime towards end of 2000. In about a year or so, we got a call back, and I still remember the day, 17th of October 2001, stating, look, listen, we had put in whatever 55, 60%, and the balance, we are not going to do this. There are about 30 companies that we will be exiting out of, and therefore we can't. And I remember driving back at that point in time. We had 68 people in the company at that time. We were still a young entity, about maybe $50,000 in revenue per month, close to about maybe $75,000, $80,000 a month in expenses, and about, somewhere in the same range, maybe about $60,000, $70,000 in the bank. So we had 5 weeks of cash. And we came back and we sat and we discussed that, no, look, listen, we still have this sort of revenue. It's really about the business model which needs to get adapted. And there was a tremendous amount of, a desire to survive, as it were. And that's what we did. For the next 4 years, till September of 2005, is what I've always described us as our ostrich years. We were, just hanging in there, just head, feet, hands, everything on the ground, and it was really all about survival. Then around 2005, we went back to the same firm, which they were still on our board, And we said, look, listen, we are seeing growth now because we were linked into the telecom economy. And by then, our business model had quite dramatically changed to be akin to the growing telecom economy, where we were looking at being a part of what you term as the value-added services ecosystem. But they said that they had already by then written off this investment, in which case we said, all right, we'd like to buy that stake back. And from then, from 2005, where we were maybe about 100, 125 people, today the company is a little over 1,000 people. We now have an operation which is across 47 countries. We work with about 400 original content owners, and we've built businesses across what we call as digital goods, retailing close to about 2 billion transactions on an annual basis. Scale, to me, is something, to be honest, sitting on a panel like this, is something I've learned. I will not profess to state that as a young entrepreneur, I had that thought process in mind. As any young entrepreneur, we wanted to do a lot of things. And perhaps at that point in time, because the marketplace for digital was just about opening up, that's what Hungama as a company has ended up doing. We call ourselves today a digital media conglomerate. We've been fortunate to be in a market which is, over the next 3 or 4 years, now going to transition from 2G to 4G. We'll move from about 150 million consumers to close to 600 million consumers on the internet. And mobility and mobile will be the big driver in whatever is being tabled out there. So we learned it the hard way, but I cannot profess more about the need to focus. So for all of you who are sort of, budding entrepreneurs, that one big idea, have that tested, have that actually. And today, you have a lot of options of doing that. To me, one of the best ways of testing a quality idea, in whichever field it could be, is to actually just put out a little app into the marketplace and see, just coming from that, what is the reaction of those consumers? And really be focused on your core product, because the marketplace is not there for anything but above average, exceptional in terms of what's being put out there. So we'll talk more about it, but this was a little part of my journey, and I thought I'll share that.
Very good morning, and I would continue where Neeraj left. That is focus. I work in a obscenely profitable segment, that is hospital and healthcare. So is pathology. Not a very new company in the standards of Facebook. 18 years old. Started with nothing. I wasn't knowing the full spelling of entrepreneur until I became one. I was a research scientist. Something was pushing me to do something different, and I have done something different. If you do what everybody does, in Hindi, वो मत करो जो पड़ोसी करता है, वो मत करो जो पड़ोसी करता है, क्योंकि फिर वो ही होएगा जो पड़ोसी हुआ है. So I focused a bit different. The word focus is very important. The pathology is made up of microbiology, pathology, biochemistry. I left microbiology. I left pathology. I focused in biochemistry. That's the focus. All my peers have 100 laboratories and 500 laboratories across the country. I have one laboratory. That laboratory is in Mumbai. Every night, same night, before midnight, all the consignment I could manage to get in my floor. So this is a logistics company, not a pathology laboratory. So the focus was to do only those tests which others cannot do. Don't do every test. So it has evolved in these last 18 years as a cheapest laboratory in the entire world. India's healthcare system is as such cheaper compared to all other countries. And in India, we are the cheapest. We work on a B2B model. Laboratories and hospitals which cannot do the test by themselves, they don't have volumes to do, they give it to me. Scaling up for many is final. For me, scaling up was essential to start with itself, because the business itself is scale. If there is no scale, there is no business. So somewhere I was lucky to be in the business when username password became existing in India, somewhere in 1995. My web server is the oldest in the healthcare industry. I'm a mathematics man. So I could put up, in fact, I'm seeing what is common between all three of us. In my office, for 400 staff, I have 400 computers, which means IT is the business, pathology is only the back end. So if you look at it, integration of IT, logistics, and focused biochemistry business has given me an identity. Today we do around 140 crores of turnover, and I must tell you, every investor is after us. And in the industry of 60,000 laboratories, there are only 4 guys who have crossed 100 crore turnover. And all of them are adequately married. And there are no new entrants. So that makes the space a bit demand driven. And I'm lucky to be there. And my business is, as I said, volume, and I had to do the volume. Today I'm scaling up. We have opened up a laboratory in Bahrain. We intend to make this laboratory as 12 hubs across the globe, where everywhere the same 3 hours flight will get the specimen before midnight, do it in the night and report it in the morning. So if at all I have to give any piece of advice in this small introductory time, word focus, scale up, and reach to a size which is worth. Otherwise, it's just going to be one more business. Thank you. I will pick up when the questions comes later on.
Thanks, Dr. Velumani. Those were, I think, 3 distinct styles, 3 distinct entrepreneurs, really inspiring stories. So I'll start with my questions to Dr. Velumani. I think one of the things that you said, they call it keeping up with the Jonases in English. You use the Hindi terms, neighbors and all of that, Podosi, etc. So I wanted to know what gives you the strength to akla chalo, as Rabindranath describes it. How do you stand alone from other competitors? They have a different strategy altogether. You have a centralized lab. What gives you this confidence to oppose the conventional wisdom, if you will?
We are born alone and we are going to die alone. In between, because we are insecure, we make groups. And we identify with everyone. And we see what next man is doing and doing the same thing. I felt I will try to do what my mind says. I had done my PhD in thyroid. Once you do a PhD, that means you are inside a hole. Because PhD means you are drilling down into one segment. You don't know anything else. Once I finished my PhD, I started a laboratory with 3 tests, T3, T4, TSH as thyroid. Everybody asked me a question, roti milega kya 3 test mein tumhara? I only told them, look, 100 crore thyroids are in the country. And today it's a 2,000 crore brand. So my mind said, lage raho. And I remained focused there. I must tell you, very interesting in this field, this gland is only 15 grams. No one in this world has died because of a thyroid problem. A gland which does not kill but weighs only 15 gram can give you 2000 crore. Imagine 100 kilogram body, how much crores you can make out.
Beautiful. Nicely said. My other question to you was, today it is evident to even the most real world businesses that IT has to be the backbone, etc., etc. Way back when you started, that was not so evident, so to speak. So how did you go along with that journey? Did you start off with IT as a huge base, or you grew into it?
I was a mathematician. I'm not a medical man. So for me, computers were like how somebody says, love computers. So I was in love with computer. So the very beginning itself, all lazy people like computers. And I was the laziest, and I moved towards computer, started working on computers. And I believe this business has become so profitable only because of an IT enhanced, IT monitored, IT controlled, barcoded, bidirectionally interfaced, machine talks with the server, values go directly to the server, there is no typographical errors. Mind you, this is quality. Everything else done manually results into lot of embarrassments. So for me, computer was not an option. It was an essential platform on which I had to pick it up, scale it up. In fact, the entire organization functions on an IT which is made in-house. All my peers buy a computer system and then work for that system. Ours is a 50-member team in IT, which is every day innovating so that you define what you want and you try to get what exactly is needed for an end user. Before even he comes back to us, you are ready with the solution.
Thank you. Moving to Neeraj, fascinating story, ups and downs of an entrepreneur, etc., etc. Help me understand this. You talked about focus on one hand. You have 9 products on the other. How does an entrepreneur figure out what is adjacent, what is not, etc., etc.?
Yeah. See, Parag, for us, being early in a market was both a blessing as well as a very big threat for us. In fact, I was reading somewhere about entrepreneurs and scale. There was some research done of some 3,200 companies. And one of the biggest failure ratios of startup companies is when they attempt to scale too early. It's apparently the number one because you typically are trying to solve a particular problem. You are ending up even evangelizing that particular segment, and hence, so in our case, those 4 years which were our ostrich years, which was our survival years, where we didn't have any kind of capital resource available into us, and yet we wanted to make an honest living doing interesting things that were happening as the digital economy itself was opening up. That led us to, there were parts of our business which was very directly linked to the entertainment world. We had made an acquisition as early as, even before we were funded as a company, of a very large Bollywood portal, which even today runs as the #1 Bollywood portal. It's called Bollywood Hungama. That gave us access into the entertainment economy. We found that the entertainment economy is going to be a very big catalyst for the adoption of digital media. And as we worked closely within that economy, we realized that there were other products that could come out of that. So gaming to us came out of that as a medium as such. As we progressed, we pretty much as a company started incubating these businesses. So today, each of these businesses, we started a business about 3 years back called Artist Aloud. It was driven by the opportunity that we saw. We were digitally distributing about 2 million units of content globally in about 47 different markets across mobile, internet, PC, IPTV, DTH networks, to about 150 partners. And iTunes would be one partner. We were the first company out of India to work with Apple on iTunes back in 2005. Now, a problem that we saw over there was artists, musicians, all this while would create their own music. In India, music is a derivative of the film industry, unlike the West. And as the physical market for music was falling, their ability to reach, they used to do these albums, which was not possible. So Artist Allowed sort of started off with something like that about 3 years back. We started with 30 artists. What we were giving them was the same digital distribution network that we had created for mainstream Hollywood, Bollywood, whatever it may be. Today, it's about 400 plus artists, and it's a full-fledged unit of its own, and it runs in that manner. So I think, for us, it's really been a journey of being balanced, and at one level, because we haven't, even today, we are a private company. So that has brought about a discipline from a financial angle of a very high order and magnitude. We've opted not to go in for our first experience itself, and I hold no grudge against that particular VC. In fact, it was the best thing that could have happened to us on 17th of October of 2001, when we were told that, I'm sorry, you will have no further funding available to you, and we just had to. And I mean, the good thing about humans are, there is a tremendous sort of instinct of survival. And that survival, then once it gets better, it goes into thriving. So for us, scale has happened. And when we've sensed scale, then we've not, held back. Then we've taken risks. Our entire process of how we consolidated the broader content economy is actually a reflection of that. We went ahead when we saw an opportunity that was happening on mobility. We went and acquired almost 70% of all Indian content on a worldwide exclusive basis for digital distribution. And on the back of that, built that network. Now, this space is an interesting space because when you look at digital, it's almost a $100 billion business globally. You have in a market like India itself, it's probably about $1.5 to $2 billion currently, but over the next 4 years, as we transition from 2G to 4G, our sense is this will become a $6 to $7 billion business, where everything that we are doing, when you look at it, we see ourselves as a catalyst for the broader e-commerce economy, because the broader e-commerce economy is dealing with maybe 8-10 million consumers who are buying online right now. We are already dealing with over 250 million consumers out of a 750 million consumer market, but we are dealing in micro products, so we sell 1 rupee, 2 rupee, 5 rupee, 10 rupee products. And through that process, the consumer is getting accustomed to paying and receiving a digital good. The digital good could be a game, could be a movie, could be a short video, could be an application. So that's the manner in which we are taking it forward, but we continue to be remaining, our focus is about incubating businesses, bringing it to scale, and then, bringing in the right partners into that if needed.
The other thing that strikes me about your business is the fact that some of your partners, whether it is on the content side, music labels, or on the distribution side, let us say the operators or iTunes you mentioned, these are large companies, they drive a hard bargain. How does a startup deal with all of this? How did you deal with all of it so that we can pass on?
No, I think that's very valid. And you can, in a business like ours, it's very easy to kind of get squashed at both levels. The Indian telecom market has been, one of the most hyper-competitive markets anywhere in the world. And hence, for them to extract better and better yields is natural of sorts. The content industry anywhere in the world works on concepts of you've got to pay, you don't get it in a sense. For us, we realized this within about 9 months of us working in a model in this manner. And then we took a risk. We aligned, we started off with focusing in one particular segment. We looked at music as a category at that point in time, and that was one of the categories which was growing. And with that concentration, for the first 7-8 months, we actually bled. But eventually, we were able to demonstrate growth and benefit to both stakeholders. We were able to deliver much more value at the distribution end, and certainly far greater in revenue terms into the content industry, and hence made our sort of intermediation relevant in that entire process. Over the last 4 or 5 years, our entire focus has been more to further backward integrate and not just be, enabling content, but moving into what we call as managed services. So today, we have our own platform that recognizes 5,500 devices. It will deliver any form of content. It is been enabled future-proof in the perspective of bringing in smart cloud and features of that nature. So you're constantly, and that's the other thing, certainly in our part of the world, and I'm sure, what Dr. Velumani talked about in his business. As entrepreneurs, I always feel, you're playing a game of Mario. I don't know if you've played this, it's like you've got to jump and you've got to sort of know when to jump as well, because you are yourself almost like killing your own business model and reinventing it. And you can make a couple of mistakes, and we've made them. We've all made mistakes. You get those little power-ups, so you sort of, press it up a little further and come up. But 2 or 3 mistakes is all that it gives you, otherwise it's game over of sorts. So in a transforming kind of an environment, I feel there isn't a need for overzealousness and over-eagerness. You've got to, the way we've approached it is what I describe as prudent pragmatism. There is a sense of, and even the aggression is kind of balanced with a little bit of pragmatism from time to time. And I say this more so for most of us here and several of you entrepreneurs as well, because one market makes you get into a slightly more pragmatic zone of sorts, and that market is India, where patience has a different magnitude of virtue in almost anything that you do, any kind of business. It kind of, tests you at a different level. And for all the delegates from overseas who are looking at businesses, etc., remember that and be patient with the entrepreneurs with whom you're investing as well.
Thank you. That rings true for sure. So one last question before I open it up to Q&A. Vivek, young guys, probable dropouts, etc. How did you go about building up a team? Given you were young, I'm presuming recruited senior talent who used to work for you, etc. How did you go about doing that? And second, overlay that with the fact that you were based out of a tier 2 town, started off there, Cochin or Trivandrum as the case may be. So answer those two for me. How did that play out?
So actually the fact that we started out of college, I think it worked in our favor, okay, because I'll be very honest, I think the first 30, 40 people that we hired were people we hired from our own network, okay, so people we hired from our, as in classmates, college mates, batchmates, schoolmates, okay, and these guys were still learning, okay, so for them, even if we pay them $2,000 a month, that works. Okay, so it's kind of how most student startups work. Once they step out, the same person is possibly looking at 10, 15 times the salary. Okay, so we kind of got that edge on people. We actually had a lot of people. We happened to be the first student startup out of Kerala, so that also helped us to attract talent. We got a lot of media coverage and PR, so the small city thing also worked for us. There's nothing much that happens in a city like Trivandrum or Cochin. So any entrepreneurship activity actually gets a lot of media bliss. We started getting calls, emails, both from clients as well as people who were in the same industry saying they want to be partners, they want to be clients, they want to join the company. It made our work easier. The difficult phase was once we moved out of college. Okay, but we kind of continued with the same policy. We kept hiring students again. We kept encouraging them to cut class and come and work at our place. Okay, and I think we've inculcated a culture in Kerala as such. I don't know how many of you are aware of Startup Village, but like I told you, like 7 years back when we started, we were the only student startup. Now in a year, we've actually got over 900 applications from student startups. That's the magnitude you're talking about. And this is across around 84 colleges in Kerala. There's a huge network that has been built. Okay, so I think both the questions that you asked, the fact that we started young and the fact that we are from small town, worked in our favor. Okay, so.
That's good to know. I come from Bengal and Kerala are these communist infested states, as I like to call them, with their own set. Yes, nothing much is happening there, so good to see activity like yours coming along. I'll open it up for questions. Please direct them to the three entrepreneurs. Identify yourself and go ahead and ask the question. Yes, sir, please. Lady in the back.
Hi. Is it on? Can you hear me? Ah, okay. Hi, thanks for the discussion. My question is actually for Neeraj. Firstly, thanks for your sharing your journey, Neeraj. I've been through a not dissimilar journey and I think I've come out with the same grey hair that you have. So nice to hear about other survival stories. I'm currently the owner of a startup mobile app development business. We seem to be moving into similar areas that you're in. We have one mobile app in the entertainment space where we have a partner with IP on the single largest collection of digital Hindi songs, over 2 lakh digital Hindi songs that we're putting into a mobile app. We have another mobile app in the gaming space where we're playing with 3D animation in the mobile app gaming space. Can you share some more information on your incubation model in terms of how you partner with various businesses?
Is this specific to me?
For Neeraj.
Yeah, okay.
No, sorry.
Actually, that was for Neeraj.
For Neeraj.
Sure. I'll quickly respond in the interest of time. In our case, incubation, see, over the last 14 years, like I mentioned, there are about 9 or 10 businesses that we have incubated internally itself, of which today, I think 7 of them are still in mature phases of the way we are building it. 2 of those we have now partnered with strategic partners and taken that forward. It's largely been there is no sort of, structured science to it. If we have felt that it is synergistic to what we are doing, if it can leverage our business, we describe at 3 pillars. There is content, there is technology, and there is distribution. It's on the back of that we work around. So for example, one of the businesses which we are incubating right now is in the education space. It's a partnership that we have done with a range of partners in the. We are basically leveraging the distribution network that we have in 47 countries across 150 different partners, where we know that education as a form factor of content will also have a. Now, if I went Hungama as brand, which has been doing games and music and movies, and I said, gee whiz, I'm into education right now, I don't think too many people would take us seriously. So that business from day one itself was structured in a manner wherein we wanted quality content partners to be part of it. We understood technology, we understood distribution. So the way we break it up, content to us is 10-15%. Technology is a further 30-35%. 50% of any business is about distribution, it's about consumer activations, etc. That's how we do.
Excuse me.
Right at back.
My question is to Neeraj again. You mentioned about scaling up. That is one of the biggest mistakes wherein, like, scaling up too early can be fatal for a business. So can you tell me a few points, like, that would indicate like this is the right time to scale up?
Good question.
Very tough question. I mean, so dependent on each business, industry, etc. in what you are. My parameter to this was really very simple. For the investment we were making, were we able to get repeat consumers with a modest margin? And if we did that, and those consumers had to be repeat consumers as well, then my sense was that the economic model of what we were putting forward out there was right, and hence now it required ramp up and scale. In our case, we had the added benefit of scale which was dependent on mobility. So the way we are looking at the device ecosystem, several of you as entrepreneurs, we would strongly encourage you to think mobile first in almost anything that you're doing. The market is 220 million phones. This year itself will be 55 million smartphones. If I were to take smart and smart feature, over 100 million devices. So when you start looking at scale from a consumer reach perspective, leveraging that as a medium as well, then, this didn't exist for us, let's say 3-4 years back. But I think the economic model is perhaps the best way to gauge.
Yeah. There's a question right at the back. Sorry, he raised his hand.
Hi, thank you for the panel today. This has been extremely informative. I have a quick question, which is more operational in nature, I guess, or strategic. A lot of startups that are in the content distribution space eventually have to figure out this chicken and the egg situation where, should I be focusing on content first or should I be focusing on reach first? And at what point do these startups start looking at, or at what point should they start looking at going out there and getting funding? When they solve the reach problem or when they solve the content problem? And I'd love to hear your experience where when you went out there to get content publishers, how much of a bargaining chip was the reach? How much of a bargaining chip was the number of people you could reach out to with their content?
Okay, sorry. My advice as a startup would be to be focused on content, because the thing about content is that it's unique in what it's doing. And it doesn't matter whether there are 10,000 consumers or 10 million consumers potentially available for that. You will, if you were to see, for example, YouTube, one of the big trends that's been emerging over the last 18 months is this made for digital content creators, which are today competing with mainstream broadcasters, studios, etc., just in terms of the sheer niche nature of their content, and they are ending up getting far greater distribution. So my sense is distribution will follow if you have a quality sense on content first.
If I'm not mistaken, really, when you have to scale up, cash flow basically is the lifeblood of, the ability to scale up, Could you kind of just shed some light as to, how your business and your segment was really structured and whether it afforded you an advantage, or if not, there were other issues that possibly helped you in scaling up?
I think I said this business is obscenely profitable. I was quite reluctant to state it, but then this industry is like that. From the day I got in, I didn't have money to get in, but I got in. And from that day, I don't have a banker until today. Today, I have a banker with whom I have kept my money with him. So, at no point of time, I needed funds or limitation of funds. And somewhere, this business generated so much of revenue. I have an advice to all budding entrepreneurs. Please don't spend, invest. Many get into spending mode before they become an entrepreneur, and then they start borrowing, then they start diluting, then they realize that they've done an early mistake. First, make sure your money goes back into business, I had not taken salary for, literally speaking, 15 years. Not I'm recommending or advocating or forcing it on. But funds was never a problem. Funds are today not a problem. Today I am demanding a value only because I tell them, gentlemen, I have money in my bank account, why should I take money from you? So coming straight to your question, this business did not truly require funds for scaling up. It needed stamina to scale up, and I could have it, fortunately, at that time.
Is that it? Okay. Thank you. I think 3 diverse entrepreneurs, classy entrepreneurs at that. I hope you enjoyed this session as much as I did. I think the trip from Bangalore was worth it. All 3 of you. Thanks a lot.